This is not the greatest headline to start off this week, with Tesla now delaying the production of its expected to be mass-produced and more affordable Model Y. This is
what do you think is the most likely scenario right now for Tesla?
All I know is that there's certain places where I live where I park in a parking lot, and it's like, there's like 8 Teslas, and then there's a space for me.
All that and more. So let's get to it. Tesla stock is up in the pre-market a little over 0.5%, currently sitting at $229 per share. Today is earnings day, and while there might not be a ton of good news for Tesla when it comes to their core automotive business, I gotta say, I am looking forward to the earnings call, or should I say company update. I do believe after the call, they're going to do like an hour-long presentation of some sort. This stands to be one of the most important earnings call since I've been an investor in the stock since 2020. Let's go ahead and gauge the temperature in this Tesla Q1 2025 earnings preview.
Yeah, let's check out Tesla, because we've had some news on what they're doing with one of the cars, and we're waiting to hear some of the numbers from Tesla this week.
Yeah, so Tesla this is not the greatest headline to start off this week, with Tesla now delaying the production of its expected to be mass-produced and more affordable Model Y. This is concerning because this has been such a driving force of Tesla's hopeful margin improvement, as well as their overall, I'd say, like, adoption and sort of mass market appeal was really read hugely through this Model Y. So according to, I saw reported by Reuters, actually, the global production of their Model Y is expected to begin still in the U.S., but it's expected to occur at least a few months later than had been initially outlined at Tesla's, last time they gave some updates regarding the Model Y.
All right, I do believe there needs to be some clarification here. The report says Tesla is delaying their more affordable models, but I do believe they're talking about cheaper versions of their new Model Y. At the moment, they've been selling a launch series version and some off-brand version of that doesn't include FSD at the moment. As far as I can tell, they're currently not selling the performance version, nor are they selling the cheapest version of the Model Y just yet. But as far as delaying the more affordable models that Tesla plans to offer in the first half of 2025, it seems that Reuters is trying to blend those two metrics. I'm not sure. Something tells me we're going to get a lot more color on that today.
That's right, and I think investors, obviously Dan Ives among them, he's an analyst of course, but want to hear that Elon's going to come back. They want to hear that there's a focus again on getting sales going, that you're going to see a lower priced EV coming out, and I think the big thing too that's kind of kept the narrative going before this sort of politically related route that they've had is what's going on with the autonomous vehicle, with the whole AI and AV business that Elon talked about a while back. And with him focused in the government on cutting government costs with Doge, investors aren't seeing a lot of that. This is the sort of thing that goes back years, right? When investors were worried Elon was spending too much time at SpaceX or with the Boring Company and not enough time at Tesla. And here he's basically spending most of his time at the government, and they want to see that the guy who built the company and who has steered it and made a lot of people a lot of money is back and focused on Tesla.
Elon, he's not a helicopter CEO. You got some of these parents nowadays keeping tabs on their children well into their mid-20s. At some point, you gotta let these kids fly on their own. Tesla was founded in 2003. Let's just say this company is old enough to drink on its own. Publicly traded for damn near 15 years. That's plenty of time to get this company up on its feet and let it trot off into the world on its own. Luckily, we have a brilliant CEO with an incredible vision. He's gravitated some incredible minds around him to execute said vision. He doesn't need to be there 100% of the time. Much like the cars, this company's on auto mode, ladies and gentlemen. With or without Elon Musk, this will become the most valuable company on the planet. With Elon, it just happens much faster.
There's really two areas I think investors are going to be focused on. They're looking for clues that Tesla's auto sales will rebound from a very weak Q1 in which their sales deliveries were down 13% year over year. So, what will the updated 2025 sales guidance look like? Last quarter, they lowered their guidance pretty significantly, now expecting only growth, slight growth this year. So I think analysts have really taken down their estimates. We're now forecasting a 10% drop in sales volume this year. But that guidance is really going to be, I think, the number one thing that analysts are looking for. And then secondly, any information regarding the launch of their unsupervised full self-driving in the Austin market coming up in June, and as well as any update regarding their future product pipeline. So those are really, I think, the key things.
Garrett, comparing the PE ratio for Tesla to the rest of the automobile industry right now, and I know you kind of look across the entire automotive landscape and really assess what is different about all of these players right now, but Tesla is, 300x some of the other PEs that we're seeing within the industry and within the sector. What is it that investors are going to be expecting going into this call to make that PE ratio justified?
Yeah, it's a great question. It's always traded at a massive premium to the rest of the industry, though, and we think that's justified. So, Tesla is, of course, not only an auto company, but they're involved in energy storage, a business which is growing a lot faster than the auto business and has higher margins, robotics, AI, as well as we think the real value here is in the autonomous driving, the full self-driving software that they've continued to improve. And we'll really get a chance to showcase in June. I think everyone will be watching that.
Ding, 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 ding. Tell him what he's won, Johnny. Your mother right. I've said it before, and I'll say it again. They not like us. They not like us. So much, in fact, that you could bundle them all up and they still wouldn't equal to what Tesla is going to be worth in the future. Tesla's FSD is going to transform transportation and save countless number of lives. Not only is it necessary, it's going to be quite lucrative as well. And let's not forget about their best product, which is on the horizon, which is the Optimus humanoid robot. Let's just say no one's ready for that bombshell quite just yet.
What do you think is the most likely scenario right now for Tesla?
The most likely scenario is definitely a decline in unit sales on the automotive segment, but also continued strong growth in the power generation segment. So there's not necessarily a one-for-one offset there. Automotive still makes up roughly 80% of revenue, and you have power generation growing at 180% over the last 3 years, but still only makes up 10 to 12% of total revenue. But there is a segment there that is definitely growing to a point where it could offset some of the loss in the slowdown of unit sales. So kind of a silver lining, not all bad news for Tesla. And definitely, another component that could come online, and we hope to hear more about this in their guidance around the services segment and full self-driving. This is another piece of technology that we expect to go much like power generation that will simply be licensed by other OEMs and used, and that's a fee for service that Tesla can just absorb and further monetize as they've already developed the technology, just like they're doing on the power generation and charging side right now.
This point now at 223, is Tesla a buy? I mean, do you start to say you buy it here, you buy it tomorrow, you buy it for a long term, maybe, or after earnings? What do you think about the price right now?
I think the price is still attractive, given that when you look out 2 to 3 years, earnings are still growing by 18 to 20%. The broader market is only growing at half of that if you're lucky. So this is still a company that is profitable. It is growing earnings faster than the market. And so it's not always an even ride, pardon the pun, but also, the key man risk is being disruptive to the price down to a point where this is still an attractive level, or at least a reason to own a portion of it in your portfolio at this point in time.
Ladies and gentlemen, I can't tell you what to do with your finances, but for me, after using the products, I know that this is going to be the most valuable company in about a decade's time or so, if not sooner. I am all in on TSLA because I believe in the company and I believe in the vision. Sustainable abundance is the goal. A worthy objective indeed. And it's also quite lucrative.
I think on a near-term basis, there is some opportunity, and specifically, there's a catalyst opportunity around the earnings call. You know, we're looking for the potential for Elon Musk to be a bit more re-engaged with Tesla, the opportunity to reiterate the FSD driverless event in June. This outweighs some of the fundamental factors that we expect for a weaker, earnings result itself. Beyond that, though, I think there are different considerations that still keep us equal weight on the stock as far as the volume and fundamental setup as well. But near term, there's a catalyst opportunity.
What can I say? The core business, the automotive side of the house, that's going to look mighty pedestrian, if you know what I mean. Sure, energy is going to offset a little bit of it, but it's really about those future prospects, those future revenue generators, whether that be the more affordable model, whether that be what's going on in Austin this summer, or even Optimus, the humanoid robot. Unless I miss my guess, Tesla's gonna do their damnness to try to keep investors' eyes off of that earnings doc and looking beyond the horizon to brighter days.
All I know is that there's certain places where I live where I park in a parking lot and it's like, there's like 8 Teslas, and then there's a space for me. It's mind-boggling. When people buy an EV, they buy it many times. They buy a Tesla, and is that going to change?
Look, I think as far as leadership in the EV market, Tesla is clearly there. The opportunity for Tesla is they're really the only ones, at least in the U.S., that figured out how to sell EVs profitably. Everyone else has suffered with a lot of losses. So I think Tesla has an opportunity to continue to lead the market. I think it remains to be seen on the brand damage side, but I think you're right. I think we've seen over, the history of sort of market share dynamics for autos. Market shares will swing around, and I think, the thing to keep in mind is Teslas are actually relatively affordable. The $7,500 credit, which we expect to go away, is actually still in place, and that makes a Tesla today one of the more affordable vehicles in the market, especially if you're leasing it.
In a vacuum, Tesla's numbers are going to look pretty bleak. But if you compare it to the rest of the industry, they're still dominating at an incredible rate. Regardless of what perceived brand damage might happen or whatever, these are still the best things on 4 wheels. And the technology is only going to create a larger moat. For me, Tesla under $300 per share is a steal. And I'm going to take advantage of it at every given opportunity. Because once this company starts making money per mile instead of per car, prepare for takeoff. In conclusion, Tesla's going through some rough times right now, but so is the entire market. The macroeconomic conditions are atrocious. And while the entire market is being suppressed, I have no problems accumulating TSLA at these discounts. For the earnings call today, what I'm expecting is for them to touch up on these more affordable models that they've had in their earnings deck for the past year or so. Second, I'd like a little more clarity on what they plan to have happen in the summer over here in Austin. In addition to that commercial aspect of FSD, I'd like to know what they plan for the consumer, how it relates to liability, insurance, things of that nature. And finally, who wouldn't want a little dose of Optimus news? Either way, I expect there to be a ton of volatility in TSLA. And given that this is a company update, I expect there to be some clarity on at least one of those 3 issues. When it's all said and done, Tesla's not going to just give me what I want. They're going to give me what I need. That's all I've got for you today. Be easy. Peace.